Friends, greetings to everyone. Another market review. The market is going to decline. Unfortunately, we are once again facing a wave of decline. Today we'll talk about this. And let me remind you that we are on the trading platform Pro service. This is a service we've developed for analyzing limit orders as well as margin orders. These are exactly what show us the future of the market, that is, its intentions. First, let's start perhaps with funding. Right now, I'll turn on the group with the highest negative funding. On our service, we sort all Binance futures pairs into 4 groups. I've displayed 2 of them on the screen now, and we can see that the negative group has 11%. All Binance futures pairs are being shorted with such large amounts of money that the futures price becomes lower than the spot price. The higher group, on the contrary, is longed by 4% of the coins. And what do we see? Right now, there aren't really any significant longs in the market, and there aren't that many shorts either. So I wouldn't say the market sentiment is anything extreme right now. For example, here, when the funding rate for the group was negative on June 5th at around 15%, actually, not even 15%, it was 36% at this point. This indicated that 36% of all Binance coins were being shorted, and after that, the market actually followed those short sellers. Right now, that's not the case. Currently, futures traders don't know what to do, but back then they knew exactly what to do. In other words, there were so few shorts that the number of longs actually exceeded the number of shorts. So, precisely when our funding rates become more positive than negative, it's a sign that the market will be pushed down in order to shake out those longs that have accumulated in the 61 to 600 range, starting from this point. Examples? Sure. Let's open the 4-hour time frame and see how the funding plays out. We have funding history available from, I think, 2023, so there's quite a long period of data. Well, let's look at the current market phase we're in, which is a downtrend, and make sure that, indeed, when the funding rate is higher, meaning there are more longs than shorts in the market starts to drop from those levels. If not immediately, then definitely within a week. And during this time, Bitcoin is moving sideways rather than showing any growth. I've already covered 2 situations. Here is the third situation where once again the number of longs and shorts became equal and the market started hunting for the longs that began to get stuck. That is, traders entered expecting a rebound. Right here, they were baited immediately. There was a small rise and then the market was taken down another level. Moreover, throughout this entire sideways movement, there were more longs than shorts. And of course, the market punished them, and now a similar situation is happening. I remember clearly, as we approached 70,000, traders started actively looking for longs, after which the price was pushed lower. This happened right during the decline and the funding turned like that. This is actually an anomaly. A serious anomaly, which shows that people are simply not giving up in anticipation of growth. I myself am convinced that we will see growth, yes, but it's a matter of timing, because all the positional metrics, which we're not discussing in this review since we're focusing on intraday trading, indicate that in the future we will see prolonged growth. Well, let me quickly go over this. I'll just open up one metric. The positional metric is called AVG. Today or tomorrow, I'll repost a tutorial video about it, which explains in detail what this metric is and why it indicates prolonged trends. And now take note that AVG has already reached those values. Let me open the daily time frame. We have historical data going back to 2019. That is, we are covering all periods, most of the lifespan of the crypto market. And now, AVG has already reached the same values that it had at the market bottom in 2022. The same values were seen at the end of the 2021 season and also during the Corona dump. And what happened to the market afterwards? Of course, it went up. Yes, not immediately. Yes, it took some time, but nevertheless, prices rose significantly. And now, we are going to see a similar situation. Nothing will change. Therefore, in the future, we can expect significant market growth. But locally, we should still expect a correction. So, funding is currently one of the first arguments, or rather the first argument that I've mentioned today. Next, let's move on to the second argument. This is our short preset, which shows us the entry points for short positions directly. And what do we focus on first? We look at the total metrics because shorting is a synchronous story. The markets fall in sync and the local distribution that happens also occurs across all coins at the same time. For example, in this range, our diffs became greater than the asks. This is a place to enter a short position. Here as well, our diffs became slightly greater than the asks, increased a bit, but then even from the entry point, they dropped by 10%. And now it's happening again. We've once again reached the point where we need to forget about longs, local longs, intraday longs, and work from the short side. At the same time, what kind of anomaly do we see? The new seller's zone is lower than the previous one. On Bitcoin, as you can see, the price is lower than it was in the previous seller's zone. What could this indicate? Well, if we have lower highs and accordingly lower lows, then we should expect another update of the low. By much? It's unknown. We'll see that in the moment when the metrics start heating up. And this is the second main argument that tells us the market is ready to decline, the market is ready to go down. And right now, we need to forget about local longs, look for entry points for shorts, or hedge our longs, which is exactly what I'm doing. Because I have a long position, I opened it. So since I'm expecting a medium-term upward move, I'm hedging myself with shorts. Why not when there's such a great opportunity? This is the second argument that tells us the markets will decline. Next, what else should we pay attention to? Let's take a look at the delta. The delta shows us the division of bids and asks. Nothing complicated, it's just the division of bids and asks. And what's happening with the delta right now? This is called the sticking effect. I'll explain in more detail what sticking means now. First of all, the delta is already at the levels from which we've seen corrections in the past, right? For example, in this range, it was before a drop. The delta was in this range before a drop as well. Now the delta is also in this range, which means it's before a drop again. And where should we be thinking about buying? Well, somewhere around here when the delta is at this level. So here's what I'd like to emphasize. There is such a thing as the sticking effect. Sticking, well, you probably haven't heard this term anywhere else because you see, there is no textbook on working with limit orders. There are plenty of textbooks on working with market orders which show us the past, right? The chart only shows the past. That's what has already happened to the price. We're still looking at what's happening with limit orders, meaning where people want to buy. Well, not people, but rather, let's say, algorithms that are set up by market makers. And there really aren't any textbooks on this. Maybe I'll write one in the future, but for now, textbooks aren't really my focus. We'll see, maybe when I get tired of the market, I'll start writing a textbook. So what's the idea? There's the effect of convergence. Convergence is when all three depths reach the same values. Here are some examples. Yes, here, our lines are almost all in the same place. And if we look at the spots where a good short started, all the lines converged in one place, all three lines. That was exactly the high, after which the price was pushed lower. And now let's say we're almost at that convergence moment when all the lines are in the same place, in the seller's zone. Moreover, those who are especially attentive may notice that the order of the lines is also important. Sometimes the green line is on top, sometimes the blue line is on top, like now, for example, and sometimes even the 8% line is at the top. Yes, at the very top. By the way, that's generally a bearish sign. Right now, well, there hasn't been an 8 on top yet, but it's likely to happen soon. And we provide answers to all of this. I'm currently recording a series of educational videos, which I post in my Telegram channel, the second one, which is dedicated purely to educational content, so you can go there and check it out. Today, I plan to upload a video about ABG, and soon we'll also cover Delta, where we'll talk about both merges and reversals. So, in general, we'll go over these questions. So, what's the idea here? It's that we're already seeing a merge happening, and this almost always occurs before a correction. Here it's important to note that I don't rule out the possibility that there might be a bit of sideways movement, shaking out the correct side, that is squeezing out the short sellers, maybe up to 64. And only after that the correction will begin. I don't rule that out. But even if you open a short now, you'll make money on it. That's the main idea. Yes, it's important to understand that clearly. And I'm giving you the right direction. You see, most of you, I look at the channel analytics, watch my videos from review to review, you wait for them every day, and as soon as a video comes out, it immediately gets hundreds of views. Why? Because people are waiting for these videos, yes? I understand that they help you make money in the market and at the very least take the right side because you trade with the trend and in the moment you know whether to open a long or a short position and that's how you earn. And this is the third argument that tells us that right now, there's definitely no reason to look for longs. You should look for longs in these specific ranges. But as for short trades, yes, they are definitely possible. Definitely possible. For example, there were clusters here in this range, right? And after that, we saw some kind of drop of about 3%. But this works well when the price is going down, when the high becomes lower, and the selling pressure is either the same as it was at higher prices or even less. For example, right now, it's almost the same as it was last time. Yes, almost. So we just barely didn't reach the spot where the depth was heated up by 3%. By the way, after that, as I understand it, Bitcoin went up, well, yes, by a little more than 3%. Those short limit orders were filled and prices started to drop lower. All right, let's not get too deep into this. Let's move on. Let's look at this. That was the third argument. The fourth argument is the ratio metric, which also shows us the ratio of limit buy and sell orders. And what can we look at here? Let me now turn on the 3% and 30% depth. And to make it more vivid, I'll display them like this. Let's probably look at the 3 and 30%, since that's a combination of metrics I'm more familiar with. Well, longs are clear, right? So when the 3% becomes greater than the 30%, that's already a spot where it would be good to open a long, right? You need to understand this moment. We're looking at Bitcoin here. So what's happening right now? Here's the ratio on Bitcoin at the 3% depth. I wouldn't say, by the way, that the ratio is extremely overheated. No, I wouldn't say that. The ratio on Bitcoin hasn't been heated up to the levels from which the correction started last time. And if we look at the total metrics, meaning the ratio of limit orders across all coins, we can see that at the 3% depth, things are balanced right now. There's roughly the same number of limit buy and sell orders, give or take. And here, there is already something negative. What is the negative aspect? So look, we can see that the previous point where the correction happened was at higher prices, meaning the price is lower now. But at the same time, the ratio of limit sell orders is higher now. That's negative. Where should we look for longs? Well, it's good to look for longs when the 3 crosses the 30. So this is the area where we consider longs, at least at the current phase of the market we're in. But right now, the situation is the opposite. It's a reverse situation. That is, the price is lower, but at the same time, the selling pressure is greater. Therefore, we definitely aren't considering a long here either. But we don't see any extreme values or records. So this also suggests that we might continue to move sideways for a while before any decline happens. Let's turn on the 3 and 5% depth. This is a very interesting preset that I'd like to share with you. Here we're looking at the ratio, we're looking at limit orders for all Binance spot pairs at a depth of 3 and 5%. And when, at the 3% depth, there are more limit sell orders than buy orders, it always leads to a decline. That happened here, it happened here as well. Yes, right here the correct side was triggered, after which prices went lower here. By the way, for those who aren't aware yet, Bitcoin always moves in some kind of sideways range and periodically breaks out in the correct direction, then returns to the range again. That's how Bitcoin moves. Moving on. And here we had the crossing of 35. Accordingly, either there will be a correction right away or it might push a bit higher, but in any case, prices will go lower than the zone where these kinds of anomalies started. No matter where you look, any example I pull up, any of them, they always lead to a correction of this kind of crossover. So don't fool yourselves, guys. The market is ready to go into a correction. Look for entry points for shorts. For now, forget about longs locally, and I think within a week the market will already be much cheaper than it is now. Yes, this doesn't happen instantly, even though we're looking at intraday frames, but since we're looking at hourly time frames, we need to allow for a few days for it to play out, yes. But you're already prepared in advance, you can already start looking for short positions. Under no circumstances should you consider going long. Only this way will you be able to trade profitably. Everything else, everything people talk about is complete nonsense. It's total nonsense. I have a community of about 200 people who use this service. Out of those 200 people, about 30 are actively communicating with each other. Well, others are getting into the topics, studying something, chatting, spending time there. Yes, others have gone quiet, keeping to themselves, and are simply working and doing the job that needs to be done, at least in this market. They've found their own strategy and are calmly making money, taking it out of the market. That's it. Only by analyzing limit orders will you be able to trade profitably because they show the future. You can learn more about the service in my Telegram channel. There you will also find a link to the Academy where you can watch educational videos, subscribe to the YouTube channel and leave your comments. This channel is exactly what will help you make money. That's all from me. Thank you all. Goodbye.